Good afternoon, ladies and gentlemen. Good afternoon and welcome to ActivTrades Monday Market Matters webinar for 22nd of January. Paul here, and today we're going to be talking about using Fibonacci in our trading, just providing a very basic introduction to what Fibonacci is, how we use it in our trading, and just a simple trade setup that you could utilize. Before we begin though, it would be great to for people here who are joining us live for the session this afternoon, if you can just confirm in the chat box that you can see the slides and that you can hear my voice. It always helps us just to know that the technology is working in our favor to begin with. So if you could just quickly in the chat box confirm you can, as I said, that you can hear me and that you can also see the slides, that gives us a good start. Excellent, that's great. Fabulous. Thank you, people. Thank you. Much appreciated. Much appreciated. Well, yeah, we'll always talk about Monday Market Matters and talk about the news itself. We're going to talk about, well, actually, what is Fibonacci? I appreciate that we have a broad range of experience of people who join our sessions. So from the complete beginners to the very advanced traders. Today's session is probably more focused towards kind of people who are just starting out on their trading journey, just to understanding what is Fibonacci and how it looks and how we can utilize it in our trading. It would be useful to know, of those of you joining us for today's session, how many of you actively use Fibonacci in your own trading investing decisions at the moment? If you do, it'd be great, just put it in the chat box itself there. But we'll talk about what it is. Talk about how it's found in financial markets, and I'll talk a little bit about how we can use it on the platforms that we have access to as ActivTrades clients. And then, as I said, I'll just show you a very simple Fib-based trade strategy, and then based upon time, we'll have a little switch across to the live charts as always, see how the markets are reacting to the sort of opening of the US markets in about 25 minutes time. And also see if there are any particular sort of setups that are being generated there at the moment. So as always, there's plenty for us to talk about, plenty for us to cover in our discussions today. For those of you who don't know me, my name is Paul, traded for many years, traded for funds, traded for clients. Primarily, I like to focus on FX indices and commodities within my own trading. I tend to be a trend trader for longer term swing and position trades, and I tend to be a mean reversion trader for shorter term intraday. And Fibonacci is useful in both of those kind of styles of engaging with markets, but more of that later. So if you're joining us for the first time, Monday Market Matters is our webinar series, 2 o'clock London time every Monday, with the whole idea being ready to just put us in the right frame for the as we prepare for the opening of the US markets in about 20 minutes time. So every Monday, 2 o'clock London time, have a look at what the news is coming up for the week ahead. Do a major piece on education. As I said, today that will be about Fibonacci. Always talking about the tools that you have access to as ActivTrades clients, and then we'll finish with, as I said, look at the live markets as we ease ourselves into the first US session of the week and see how those how markets are responding. So always plenty to discuss. If you've got questions, you can put them in the chat box themselves, and we'll happily sort of engage with you as and where we can. So we always start with a look at the news, and you hear me say that every week. For those of you who join us every week, namely that if you're a new trader, I don't expect you to be able to completely understand and analyze the economic data, but it is important that you know when that economic data is coming out, because invariably that might induce a volatility spike if the news is very much different from what people are expecting, and so you want to be aware of those kind of, let's say, windows of volatility. And what you'll find is that the way you can do that is to look at an economic calendar. You'll find that there is an economic calendar on the ActivTrades website, and there are also other ones around the internet. So there's no excuse really not to know when the big news is coming out, because as a new trader, you want to be aware of that. So when we look at the week ahead, for those of you who joined us last week, we talked about how last week was a very British pound sterling heavy week in terms of not only the economic news that was coming out, but we also had Mr. Bailey, the Bank of England, governor of the Bank of England, speaking as well, and that that gave us some insight into sterling. This week, whilst we do have a little bit of US news data, it is not as heavy as it has been for sort of, let's say, the first couple of weeks of the month. So we'll be interested to see, what, if any, impact the news that does come out have in let's say, shaping the narrative and choosing the trajectory for not only the dollar, but all of those major FX pairs trading against the dollar as well. So today is a pretty quiet day, no real major news. What we do have tomorrow is we've got Bank of Japan, has its monetary policy meeting, and what we also have is that's one of three this week in terms of we've got the Bank of Japan, we've got the Bank of Canada, and also the European Central Bank on Thursday, who are having their monetary policy meetings. And whilst traders and analysts are not expecting any change in those interest rates, from those meetings, traders will be keen to know what is the narrative that comes out around that meeting, and that will give them a hint, of possible trajectory going forward. But as I said, we have that Bank of Japan tomorrow, as well as having the CPI data from New Zealand also. Wednesday is a day for PMIs, Purchasing Manager Indexes, and you can see there, we've got those data coming in from France, Germany, Eurozone, UK, and the US. So a slew of that data. As usual, PMIs is and this is my personal view, PMI is great for sort of a bit of a snapshot on the health of that economy, but it generally doesn't move markets that much unless there's a really quite extreme number. But as a general, it's more a kind of a thermometer, shall we say, for taking the kind of temperature of those particular economies, and it's a useful tool for private traders, because it is quite simple to interpret PMIs, namely any number above 50, and that economy or that sector is expanding. Any number below 50 is a sign of that either that economy or that sector is contracting. So for traders, it gives you a very quick, as I said, it's a snapshot of that economy. It's a bit of a, like I said, a thermometer for taking the temperature of those particular economies. Excuse me. As I said, on Thursday, we do have the ECB meeting, and people will be interested to see what Ms. Lagarde has got to say for herself. And we do get some US data in terms of durable goods, and also the US quarterly GDP growth rate. And traders will be interested in that. They're always interested in it because it gives you an indication of whether that economy is growing or contracting, and whether there is a recession, even if it's just a mere technical one. But ultimately, it's also kind of a backward-looking piece of data as well. So traders will be interested, but not as it doesn't get as much, let's say, kudos or as weight as things like inflation numbers. And excuse me. Talking of that, on Friday, we have the US monthly core PCE, personal consumer expenditure index. And that is of interest because that is what Mr. Powell and the Federal Reserve, they generate their decisions based upon the data in the PCE, more so than the CPI. So not unsurprisingly, traders and investors and analysts will be taking a keen eye on that to give, is that confirming that that inflation is decelerating certainly in the US economy. So there's quite a bit of data coming out this week, and as I said, as a new trader, it's important that you know when that data is coming out so that you can plan accordingly. Having looked at the news, let's focus on our educational piece for today. And as I said, it's going to be more of a kind of an introduction, basic introduction for new traders who are probably new on their trading journey, may have never even heard of what Fibonacci is, or may have heard of Fibonacci in perhaps, let's say, maths classes, but never really understood how it could translate to financial markets. So, as I said, for those of you who are completely new to trading, maybe even completely new to to maths in your let's say in your adult journey, it might be a useful place to start in terms of understanding well who is Fibonacci, because Fibonacci was actually a chap. His name was Leonardo Pisano, and his nickname was Fibonacci. And he was an Italian mathematician born in Pisa in Italy in 1170. So, what's that, 900 odd years ago? Okay, so he's, this is not it's not a new flash in the pan idea, ladies and gentlemen. Fibonacci and his teachings, have been around for many years, and it is about understanding how can it help us as traders ultimately. So he took himself off, he travelled, and after he returned to Italy after his travels, he documented what he'd learned in a book, the Book of Abacus, or Liber Abaci, and you can see he's also popularised in Hindu Arabic numerals in Europe, and more of that later. As I said, I'm going to give you just a very brief introduction to Mr. Fibonacci, but it is more about what is it and how do we actually use it as traders in the market. That's what we're keen to understand, isn't it? So he is, as I said, he was a real live gentleman, Italian gentleman, and where it came from, or what he actually started to understand, is that he was studying the Great Pyramid Giza in Egypt, and he made a discovery that uncovered a unique mathematical sequence of numbers that changed several theories of trigonometry, algebra, and geometry. And it's a distinct possibility you may have learned this in school, of a version of it, but maybe not understood the depth of it or where it came, and as I said, most importantly, how you could utilize it going forward. And so he developed the famous Fibonacci sequence of numbers, which has become the foundation of many effective trading systems. And what we find, okay, and you only have to do a little bit of, you can do a little bit of brief research yourself, is that what we see is that these Fibonacci numbers, they are prevalent in art, music, biology, architecture, and also used in financial markets to identify some strong support resistance levels, and also particular levels that may be of interest to traders. And so, as I said, you don't need to do much research, okay, to realize that actually Fibonacci numbers, the sequence of his numbers, are literally surround us in every aspect of our lives. And some people would utilize that to go down let's say a rabbit hole of conspiracy theories about actually how our lives are nothing more than a computer simulation based upon Fibonacci numbers. And I shall leave you to draw your own conclusions from that, ladies and gentlemen. If what you get up to the weekends in terms of what you're researching, well, you're very welcome to carry on. As I said, ultimately we're trying to be interested in, well, how does this help me as a trader? How does it contribute to me being a better trader? So, as I said, Fibonacci is about a sequence of numbers, and the relevant thing, the important thing is that it's where the third number is the sum of the previous two numbers. So you see this sequence at 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, and so on. You can go on with that. And as I said, it is the third number is the sum of the previous two numbers. So the number 5, okay, is the sum of the previous two numbers, 2 and 3. 8 is the sum of 3 and 5, okay? And that will go on, that will go on forever and more. And that sequence of numbers can be enormously useful in itself in terms of understanding. You might see, for example, many traders, and I have a few myself, will actually use things like moving averages that are based on Fibonacci numbers. So things like, you'll see for some traders, 5, 8, 13, 21, 34, 55, 89, etc. are very popular numbers to be used for moving averages. Why does that become important? How does it become even more important and relevant for traders? Is the real value lies in the fact that the ratio of any number to the next higher number is approximately 0.618, and the lower number is 1.618. And these two numbers start to become very, very interesting for traders, because those numbers can also be used in financial markets to help identify strong support and resistance levels. And this is where we start to see elements of it all coming together in a way and means to help support us in our trading decisions. And as I said, you can do an awful lot of research, and even just a quick Google of Fibonacci and where you see it in nature is quite a fascinating, it's a fascinating little journey in itself. But once we start to look at about it in terms of trading levels, that too is also unbelievably interesting. And I openly admit, within the time we have today, I will merely be scratching the surface of it. But as I said, hopefully it will give new traders just a little bit of background of where it's come from, and most importantly, how you can use it. So when it comes to Fibonacci ratios, you will very often hear traders talk about, well, not even just traders, people will talk about the golden ratio or the golden mean. And what that is that is found by dividing one number in the series by the number that follows it. So, for example, dividing 8 by 13 equals 0.161, and 55 divided by 89 is 0.61, okay? And it is that consistent, okay? That's consistent, that kind of 0.61, okay, or 1.61, which we'll come on to, that it just repeats consistently in life and in markets. You'll also find that there are some other numbers that traders like to use a great deal, okay? So you'll find like the 38.2% ratio is found by dividing one number in the series by the number that is found two places to the right. So, for example, that would be, if you divide 55 by 144, the number you'll come to is like 0.38. And another number, which is maybe not always used as much, the 23.6 fib ratio, is found by dividing one number in the series by a number that is three places to the right. For example, 8 divided by 34 is equals 0.23. What you will find is very often people will talk about the 50% level, which we'll look at in a moment. The 50% number isn't really a Fibonacci number. Some might say it's actually more to do with, I think, Gann, but I could be incorrect on the on who discovered it. But you will find that a lot of these numbers. So you will find the 38, okay, 38%, the 50%, 62, and the 161 number will become very prevalent in lots of people's trading decisions, and we'll explain how that is in a couple of slides time. At the moment, we just want to say, when you see traders talking about golden ratios, talking about the 61.8 retracement, or the 38.2, or 23.6, or the 161 extension, what we want to do is just for you to be able to understand, well, that's where it comes from. This is how it's created. This is what it actually means to us as overall traders. So when we start to look at how these numbers are relevant to markets and to trading, Forex remains a highly trending market, and we only have to look at charts to realize prices are visibly changing in an oscillatory pattern, and these oscillations and those price movements allow Fibonacci ratios to be used quite precisely in many cases. And with this in mind, these Fibonacci levels act as very strong indicators of support and resistance levels, and that can help to, it can help to traders to improve the accuracy of their entry and exit point for every trade. It can also help traders who are perhaps struggling with, let's say, discretionary trade selection. It can actually help towards a trader being a little bit more mechanical in their trade selection, and in doing so, for a lot of traders, that can actually help them become a better trader by having a very simple mechanical system that they're able to utilize that allows them to basically trade better. And Fibonacci and the sort of trading setup I'm going to share with you that is one of the ways that new traders can utilize that, okay? And we'll talk more about that in a little bit in a few moments' time. Also, what you will see is that, the use of, or rather trading with Fibonacci numbers is the fact you can define not only the stop losses to X mark, but you can also set profit objectives as well. And we'll look at that in a moment time, and probably also sometimes a little bit easier even to see on the live charts, okay? And you will find that the different Fibonacci ratios can be the cornerstone of price structure, and will go hand in glove with effective chart patterns that you may see other traders using, things like Elliott waves, harmonic patterns, and even divergences. All of those have elements of Fibonacci ratios, which are really the building blocks of all of those particular trading styles. So if you're interested in those trading styles, if you are operating those trading styles, understanding the kind of the Fibonacci ratios behind it and the relationships is unbelievably important. But even if you aren't using those, just understanding Fibonacci and understanding where we see it in markets can be enormously helpful for traders as they strive to build their own sort of trading setups and their own kind of trading methods. So what we see with regards to what we would term as Fib ratios is, for some reason, these ratios seem to play an important role in financial markets, just as they do in nature, and they can be used to determine critical points that cause price to reverse. Really, they become a little bit of a self-fulfilling prophecy. And what we see is price has an uncanny way of respecting Fibonacci ratios, and very often quite precisely, especially when you start to look at things like harmonic patterns and Elliott wave patterns. Hence, you can use the Fibonacci ratios to ascertain the correct technical levels. So what we realise is that price action is never truly random, and that every wave, every move leaves behind clues for the possible next move. And so once we're able to understand that, we can use that previous price action and utilize the Fibonacci ratios to help us determine where might be the anticipated price movement. And as I said just a moment before, for many traders, having that kind of almost like systemized way of operating can be what helps them become a better trader, rather than just using, let's say, discretionary means. By having an almost like a simple system, which we'll discuss in a moment, that can help them to effectively to clear out ambiguity, give them some clarity, and provide them with a simple, almost like a checklist that they can just follow in terms of their own trading. So, first thing we'll look at are Fibonacci retracements. Now, most of you will have watched charts, okay? You'll have seen moves and realized that retracements occur when a given market is rapidly heading in a certain direction, and the market reacts as traders tend to take some profits. And it is that retraction that represents a good time to re-enter the market. So if traders are sat on the sidelines, okay, if they're waiting for an opportunity to join a trend, the Fibonacci retracement might provide the simple and easiest ways, okay, for a trader to find a place to join the existing trend, predicting that or anticipating rather, that the dominant trend will re-exert itself in the direction that it's particularly going. So there's just a chart here, and there will be a few more charts we'll look at in a moment. But you can probably see that is quite a clear trend. Okay, and you hear me always talking about how you want to effectively operate with if good trends leap off the chart at you, and what you can see here is in this particular move from our low here to our high here, we can see that price certainly did move in a very nice strong trend, and then what happened is we retraced before we made a move, and then we retraced before we make another move, and we retraced before we make another move. And actually very often understanding these retraces via the understanding the kind of relationship between the Fibonacci ratios in terms of how far they retrace, as I said, that can be a very useful tool for many traders to identify possible points where they may well be able to sort of, in this case, buy in to join an existing trend. And that becomes a very elegant and very unique way to as I said, to build a simple trading method. And I'll give you the rules for that in a moment's time. But what we want to do at this moment is just understand, when you hear traders talking about Fibonacci retracements, it's because it's a case of as a price moves, it is the retrace, okay, and understanding how far it retraces and being able to recognize and identify and be ready to utilize that as a space or a zone where you might wish to sort of, in this case, as I said, to buy in, to join an existing trend. So, as we were saying, when it comes to technical analysis, the Fibonacci retracement is calculated by taking two extreme points, usually a swing high and a swing low, off the price movement, and then dividing the vertical distance by the key Fibonacci ratios. Once those levels are identified, okay, horizontal levels are drawn and used to identify possible support and resistance level. And the direction of the price trend is likely to continue once the price is retraced to any of these ratios. And so the most basic use of Fibonacci ratios is to find potential levels of support resistance, almost in terms of, you might say, some people might say it's behind the market. And if the market is moving up and making new highs, Fib retracements will draw levels below the current price. So as I was saying here, we have a low here, a swing high here, basically by identifying that level and then looking at, 38, 50, 62%, okay, Fibonacci retracement levels back in as part of this move, that might be where we can identify possible, as I said, possible support levels where we might be able to take our trade in the direction of the existing trend. And that's what lots of Fibonacci traders are looking to achieve. Now, as I said, once you see it, you can draw it here, drawn it in from here to here, and hopefully, you can, as I said, you can see here that, I have on the Fibonacci tool, I have drawn in, okay, written in the levels here. So I've got a 38%, 62, all right, okay, and we can see, maybe you can actually see there, we'll have a look in a moment, is that actually price comes back to 38 before it carries on in its journey upwards. So we'll look at that in a little bit more detail in a couple of slides' time to understand, well, what exactly am I going to do as a trader to capture a piece of that? So here we go. It's a little bit of a bigger element, and what we can see is that price has a swing low here, it has a swing high there, and I'll talk more about that when we get onto the live charts. And by using the Fibonacci tool, which I'll show you on the certainly on the ActivTrades meta platforms, MT5, MT4, also on TradingView, also on ActivTrader, you have access to variations of Fibonacci tools. In this case, we've drawn it from, as you can see here, from the start, naught, okay, up to the top of the full range, 100, and then we can see the 38% level there is here, and then the 62% level was here, okay. That's what we'll look at in particular. And actually, hopefully, maybe you can see is the price pulled back, and then what it did is at this level, which was also a confluence of events with a 200 period moving average, and then also a very nice bullish pin bar. This was an opportunity here, a confluence of events to be able to buy into the market as the market re-exerted its dominant trend on its big move up. Okay, and that's what at its most basic level, okay, most basic use of Fibonacci, that's what traders will be doing. They'll be identifying a move, identifying the swing low, swing high, and then be able to draw the Fibonacci tool on it, and then provide an idea of where possible support levels will be that allow them to buy into what would be the sort of start of a new existing trend. So that's Fibonacci retracements, which is a useful place for us to get an entry from, okay? On the flip side, you will hear also traders talk about Fibonacci extensions or Fibonacci expansions. I'm not too worried or fussed how you choose to label it. All right, well, you can label it how you wish, as long as you understand what it actually means. And this is really it's a tool, Fibonacci expansion. It's a great tool for establishing profit targets. So whereas retracements look behind, we're waiting for the market to pull back. The expansion is where we're looking for price to go to, where the highest likelihood of where prices will move to. And it offers a distinct advantage over the other usual fib ratios, since it isn't as widely used by traders. But and this is something I utilize in my own trading myself. Okay, this is where I use Fibonacci myself. And as it says, rather than drawing levels behind the market as a fib retracement, the fib expansion draws them in front of the market, okay, as in front of where we think the highest probability move is likely to move towards. So, in other words, if that market is moving up and making new highs, standard fib retracements will draw levels below the current price. But it's the fib expansion which will draw levels above the current price. So if, like we saw before, if this was, our swing low, and this is our swing high, and then this point C is our 38% Fibonacci retracement pullback, where lots of traders might be buying, okay, what our ability to use fib expansions might give us a good idea of where we could aim for targets. And there are quite a few of expansions in terms of what you'll hear traders talk about in terms of 127, 161, 261, etc. And we'll look at that on the live charts in a moment. At the moment, I just want you to understand what traders are talking about when they're talking about Fibonacci expansions or Fibonacci extensions. It is the projection, Fibonacci ratio projection in front, okay, in front of the possible trader moves. So as it says, Fibonacci expansions determine where prices could potentially move to, and the advantage is those levels are drawn in front of the market. And so to draw fib expansion targets, you require effectively 3 swing points. What we need is A, B, and C. All right, and that's what we look at. That's what we utilize in terms of doing that. So what we want to be able to do is to have the swing low, the swing high, and then our point C, our fib retracement, which is this place here. And then we'd be looking at where the possible projection of future targets might well be based upon the fib expansions and the relationship between point A and B. So to explain that in just a little bit more detail, what we can see here is we measure the distance from point A to point B. That's from here, our swing low to our swing high in an uptrend. Okay. However, we can't really project price targets until point C has been established. Point C is the fib retracement has been formed. Do we have all the necessary 3 swing points? So, in short, we identified that a trend has started and pulled back, forming points A and B, and we wait for point C to form. Once point C is formed, then we're able to plot the Fibonacci expansion tool on point A, point B, and point C, and that's what we're looking at. And what we'll see is that there is actually there can be a very strong relationship between the depth of the Fibonacci retracement and how far the Fibonacci expansion will go. And with a bit of experience, you'll start to recognize and be able to realize and recognize those particular relationships. So here we go. Here's a simple pattern, which is you'll hear traders talk about it, an ABCD pattern. Very, very simple pattern, but shows up constantly in trading, and being able to understand it. And as I said, just even take this as a little bit of a simple checklist can help you systemize your trading, make it a little bit more, like a mechanical method rather than purely discretionary. So, first point: establish a trend and find points A and B. Find points A and B. Now, sometimes traders struggle with trying to identify which is point A and which is point B, Paul. How can they do that? It should be a swing point. If you're struggling to find a swing point, then this is where sometimes the fractal tool, all right, the fractal indicator can help you, and I will show you that on the charts in a few moments' time. Once you've established, a trend move and you've identified points A and B, use the Fibonacci retracement tool to find the 38% pullback. Place a buy order here at the 38% pullback, okay, or it would be a short if we were in a downtrend, okay, like here. We place our stop loss beneath point A here, so I'll swing low in an uptrend here. And what we do is we place a target at the 161 fib expansion. This becomes point D. All right. If the trade triggers, then at the 127 fib expansion, which I don't have on here, but we'll show in others, probably around about the 127 fib expansion move, then you're allowed to move your stop from point A to point C to give you a break-even position. But ideally, that's what we're looking to do. Just a very, very simple trade setup that utilizes Fibonacci in terms of both fib retracements and fib expansions. Right? Identify a trend move, find the point A and the point B. Use the Fibonacci retracement tool to find 38% pullback. Place a buy order here if you were going long, or a sell order there if we're going short. Place the stop loss. Okay, you hear me always say, you never trade without a stop loss. And you place your stop loss beneath point A, and then you place your target at the 161 fib expansion. This is point D. And if the trade moves in your direction and moves past the 127 fib expansion move, then move your stop to break even. And that is what's known as an ABCD pattern. And you will see markets move an awful lot in very, oops, there you go, excuse my drawing, ABCD patterns, okay? And that's what we're looking for in terms of an uptrend or in terms of a downtrend, okay? You've got A, you've got B, you've got C, and then you have D, okay? And that's what we're looking for, okay? You know, you identify points A and point B, put a order at to sell, okay, at the 38 retracement. Your stop loss goes above point A, and your target is the 161, okay, the 161 fib expansion. And there you go. That's, you put that trade on, and almost like, yeah, you can set and forget until it goes past the what would be sort of the 127 fib expansion here, which would be around about here, just eyeballing that. Then you move your stop from point A to point C, and then you're in a break-even trade. Very, very simple, okay? Very simple setup, as I said, using Fibonacci and in particular fib retracements and fib expansions. But for many new traders, that can be enormously helpful for them as a way and a means just to basically be able to put their trading onto almost like a mechanical footing, a mechanical setting that would allow them to sort of just operate with a little bit more rigor, a little bit more methodical way of operating, and that can help an awful lot of traders. As I was saying right at the start, it'd be good to know, of those of you joining us here today, how many of you, if any, use Fibonacci in your trading at the moment? Do you know what an ABCD pattern is? Would you know how it's formed? Would you know how to utilize your Fibonacci tools to basically trade an ABCD pattern? That can be, it's interesting to know who that, or is this completely new to you? In which case, that's absolutely fine. That's what these webinars are for, to help educate you and help you build your knowledge about trading. And as I said, this is just a very, very simple way to be able to trade an ABCD pattern, and that will work. You will see this Fibonacci will work on, short-term intraday charts, so things like 30-minute, 15, 5, 1, but also on much longer-term charts as well, okay, from sort of 4-hour upwards. So whatever your particular favorite instrument is and your favorite time frame is, you'll find that there's a way and means to be able to sort of recognize that. So here is your, this, as always, one of your tasks to take away. I always give you a little bit of homework to take away, ladies and gentlemen, before we switch across to the charts. Go away and just have a look through your favorite trading instruments, your favorite time frame. And when you can see price start to trend, look, utilize your Fibonacci tool, okay, and draw it over the moves in that new trend. Were you able to find points A and B? Were there retracements, point C, did they finish at retracement levels or zones? And once it did price continue to the fib expansion level? And if so, which ones? Okay, where did it work better on the on an uptrends or downtrends? Whether basically did it continue to move beyond the 161 fib expansion? Okay, starting to understand were there opportunities for you to basically join and enter that trade itself? Okay, as in terms of adding and building a position. In this particular case here, we can see that having been in a downtrend, price put in a new low and then it spiked up. This was our point A, this was our point B, and then we pulled back, and we pulled back a little bit deeper, than 38%. But we know that was our point C there. This was our opportunity to buy at point 38 with our stop beneath point A. And then price, project a target here, which was 161. Our target would be here. And we can see that actually price moved, but we know price never moves in a straight line. Price moves up, and then it's here where it actually careers through the 127 fib expansion. That is when you move your stop from beneath point A to your entry point, and then we can see we hit our target there quite nicely. And you can see that actually we went much further. We actually went to the 261 fib expansion. Okay, so you'll find lots of traders will use 127. 161 and 261 in their particular trading. But for today's session what we're interested in is being able to A, B, C, D. That's the pattern we're looking for. A, B, C, D, whether it be in the uptrend or whether it be in the downtrend. So as I said, just go away, have a little look at your favorite instruments, your favorite time frames. Do you see those particularly setting up time and time again, and is there an opportunity for you to do well out of that, in terms of a simple mechanical trading strategy? So before we switch across to the live charts, just a couple of conclusion points. Fibonacci, he was an Italian mathematician, clearly a very clever chap, and he identified the relationship between numbers that provide us with Fibonacci's and the golden ratio. And we see those Fibonacci ratios and that golden ratio replicate itself in every aspect of life, even down to the relationship on people's faces, the symmetry in people's faces, and the distance between your nose and your mouth and your eyes, etc. You can read into that. It replicates, that golden ratio replicates itself in every aspect of life, including financial markets. And if you can understand Fibonacci retracements and Fibonacci expansions, well, then you can build a very simple trading plan. So Paul says NASDAQ looks like it to be a classic example. Okay, what time frame is that are you referring to, Paul? We can have a little look at that as we view here in a moment. And as I said, take that on board, and we'll look at that in live daily. Okay, well let's have a little look at that in a moment, shall we, Paul? Thank you for that, and we can do that. So before we switch across to the charts, just a reminder that we are here every Monday, London 2 p.m. and next week's Monday Market Matters webinar, the education element, will be all about using checklists in your trading. So in many ways, we just looked at a very basic, simple checklist there in terms of your trade plan for your Fibonacci trading. But what we'll do is we'll go into it in a little bit more depth next week, and also how to utilize checklists in your trading, how to utilize them to make your trading better. So be sure to join us 2 o'clock London time next week. If you haven't registered for our sessions, there's a QR code there that will take you to the website and allow you to register. And I hope you'll join us for them. So I hope that's helped you. If you're new to trading and you're just trying to understand the kind of what Fibonacci is and its relationship to markets. As always, if you've got any questions or comments or feedback, then you can either call the English desk there on the London number 0207 6500 567 or email englishdesk@activtrades.com, and then we'll be very happy to take that feedback and those comments on board. So as I said, just bear with me for a moment, and what we'll do is we'll switch across to the charting platforms. and have a look at us there. So just bear with me a moment and we'll switch across. Let's have a little look at it here. I have, as usual, this is just one of the ActivTrades platforms, and yeah, I can see that I've got, like the US dollar here, one of my usual profiles that I have to be able to utilize. And here what we'll do is we will just, for example, there's I don't know, euro dollar on the daily chart. Excuse me. And what I'd be interested in looking at. So what I have here is on my charts is I'm hoping you can see these are fractal indicators there. Okay, it's the fractal indicator, which you can find on the MT5 and MT4 platform and on the other ActivTrader and TradingView platforms. You can find it here. It's in this case it's indicators. Bill Williams, and it's in their fractals. Okay, Bosch. You can select that in there. A fractal is a 5 candle. It's a 5 candle link. So this down fractal here is a case of invariably it is lower than the 2 candles before and the 2 candles after. This up fractal is higher than the 2 candles before and the 2 candles after. Now, why is that relevant, or why is that useful or interesting? As I said, for new traders, sometimes new traders can struggle a little bit in terms of where to draw their Fibonacci tools from. How do they set that up? How do they work that? And so if you are struggling, well, then sometimes, okay, the utilizing a fractal, the fractal up and the fractal down can be helpful in terms of identifying where you should sort of string your Fibonacci tool from. So the Fibonacci tool here, mine's probably set up just a little bit, kind of a little bit differently from other people's. Let's just so what I have been here we go. And let's just bring this here. Okay, so excuse me. So one of the ways we've been looking on the euro dollar is this was the high. We've got a fractal here. This was a low. It's a swing point. There's also a fractal level there. And so by drawing the Fibonacci tool here, what I have done is, I can see that, I have here, this is I call it a third, but, that's the sort of 38% retracement level here. So remember what we were talking about, A, B, C, D pattern. Let me just get the old drawing tool here. Okay, so come on, let's just give me the, bring up the pen. Super. So what we'll be looking at is, remember what I was saying is that that's what we're looking for, okay? A, B, C, D. Okay, so what once we've identified here, there's a fractal here, down fractal there. So that becomes my point A, my point B. What it does is the Fibonacci retracement tool identifies this is a third, but it's about 38%, okay, up there, and we can see that actually price pulls back to there. So this is where we would have our short order. We'd have an order to be short here with our stop, okay, above the high, above point A. This is point A, this is point B, this becomes point C, and then actually our trade, okay, our target is, remember, is the 161 Fibonacci expansion. So we've had A to B, we've had our Fibonacci retracement, and now we're looking for our Fibonacci expansion, okay, and that is the trade we are particularly that's the trade we're particularly looking for, okay, and that is just a simple bearish example of it. I appreciate lots of the ones we set up were bullish, but I just wanted to be able to show that you can do that. Let's just have a little look at here. So a smaller version of that might be that we have a lower fractal here. We have our fractal there, so there's a swing high there. Oops, excuse me. Swing fractal there, low there. Where do we pull back? We pull back here to the 38%, so we'd have a short order there, our stop above point A, and our target down to the 161. So once you start to see this, you'll start to recognize that actually there are lots of these particular there's lots of these particular moves that are occurring lots of times. Now normally the 127 would be around about here. I just don't have that on this tool because I just wanted to keep mine as clear as possible, but hopefully you can see that is the A, there's the B, there's the C, and that would move down to there. That's the retracement, that's the Fib expansion, and that just becomes that simple ABCD pattern. As I said, for many traders, that can be very, very helpful. All right, very helpful in just helping them understand, okay, where that opportunity is, where that particular trade setup is, and making it a little bit more mechanical, all right, rather than discretionary. Excuse me, and that can help. Yeah, that can help traders a great deal. So. And that was just me pulling up what's right there in front of me. So I think Paul said NASDAQ. Why don't we have a little look at that? Let's just get that off here. Why don't we have a little look at the NASDAQ there whilst we're here? So just bear with me one moment. I've got a profile set up for my US indices. Excuse me. So this is the. Let's go to the Bosch. Okay, so we can see that we have been in quite some trend there, haven't we? And you can see I have my fractals on here, and I wonder what might be just a little bit too big, or a little bit too big for let's say for some people's what's the word? Just come on, let's bring this up here. Okay. So if we looked at our previous high, there was a fractal here, and we had like kind of the low of that move there. You can see there's a particularly trend move, and actually 38% would have been around about here. And actually we can see in this particular case what we'd have been doing is this would have been point A, this would have been point B, this would have been point C, and that would be up here would be point D. And actually what we can see is that in this case, the 38% pullback would have been around about here. Actually, you can see we went down to the sort of 50, and many traders like the kind of the range between the 50 and the 62% pullback, okay, as a place to do that. What you just have to realize is that sometimes price doesn't pull back that deep. Now, sometimes price can pull back not only we've got the 62% pullback, Fibonacci retracement. Sometimes it can go even deeper and go to like a sort of back even sometimes down to like the 88%. Okay, but as a general rule, what we're looking for is in a strong trend, and a strong trend price will rarely pull back as deep as we want it to, and the reason being because it is in a strong trend. So by having your entry at the 38% pullback retracement, that is what is guaranteed that you are getting into the trend. But let's clear this down here, Paul. Let's clear some of this rubbish down. As we can see from that, we actually pulled back. We pulled back just a little bit. We pulled back just a little bit deeper on that. But just look at these fractals here. Let me just bang. What you might say is Bosch. Okay. So here we go. So some traders would say, and this might have been what Paul was talking about, is this was our last up fractal. See there, our last up fractal, our swing point. There is the low. So suddenly this becomes boom. That becomes A. That becomes B. And then actually once again, this would be C. It pulls back. It actually goes to the 50 there, but your entry there around about 38%. And your target here at point D, that is where we've done. And some people call that kind of like a measured move, and that just effectively can be, as I said, A to B to C to D. So your let's say your entry would have been around about let's just say your entry would have been around about, what's that, about 16,800, excuse my drawing, and your stops would have been, for simple sums, that would have been, let's say 16,300. Okay, it's probably a little bit big there because it could have got away 30, but what I'm looking for there is my trade risk is 500 handles, okay, 500 points, but then I'm going from 16,800. As I said, I'm a better trader than I'm an artist, ladies and gentlemen, but we go to, let's just say that's 17,500 for the sake of simple maths. Okay, so what we're looking for is we'd have been risking 500 to make 700 points. Okay, so that's what we'd have been looking for in terms of there's about 1.4 there you go. I've just done that in my head. I probably need to use my calculator, but that's what we'll be looking at. And that's, as I said, that's just a simple A, B, C, D move, okay? A to B, C to D, okay? And lots of traders, and I know a lot of traders who will trade measured moves like that quite happily, day in, day out, in terms of how they are, okay? And let's just clear this down a little bit here. So, gosh, bang. Hopefully that is what you were particularly looking at there, Paul, and giving you an idea. Good find there. Nice work on that. Okay, in terms of identifying it. And let's just pull this, get it into the thing so we can do that. So that was a nice, a very nice move there. Good. Here we go. Just bang. Good choice. Okay, good choice there. Now, if we have a little look, just to finish the last couple of minutes, because invariably, of course, what we have seen is, what we saw last week was the S&P 500. Okay, went on daily and weekly, closed at all-time highs. You can see it. You can see it all there. Okay, we can probably. Yeah, there we go. So, of that move there. Big weekly move on the chart, okay? From the fractal there to the fractal there, came back to the third, actually came back all the way to the 62, but then has worked its way up there, and I think it's already at 127, and so you're at break even in that trade. But what I just want to show is that's just does very, very long. It can be used on very long time frames like that, but also you'll find also some traders utilizing it on just very short time frames, which is maybe what we'll have a little look at in a moment. But the idea is we can see that basically the price is moving to those highs. Paul, homework done. Yeah, well done, Paul. Yeah, nice. That was a great move. Good move. Good call. That's it's good to see taking it on board. I'm really pleased to see that. And if we go, let's look at our kind of on a short time frame. I'm going to go down into our trades for today. You can see that basically we've just opened here, haven't we? That opened there. Now, whilst the interestingly the Nasdaq is quite volatile, we can see that there's definitely sort of been strong bullish opens there on the Dow, on Russell, and also on the S&P 500, which is perhaps not surprising based upon what we saw last week happening. Okay, remember everybody was away at Davos last week, so the big boys will be coming back to their desks today, and a little bit disappointed they missed those moves on Friday, and so we're seeing that getting bullied all the way up there, and that's just confirmation that it's a very bullish environment at the moment. Okay, just a very bullish environment indeed. Okay, let's just see what's going here on the Nasdaq on a shorter time frame. That's that is indeed, as you can see, that's the 5-minute Nasdaq. It's pumped up, it's dropped down, it's just hasn't decided which way it particularly wants to go, and that's why we've got that. But then equally, we now have a kind of a, excuse my draw, we now have the sort of opening range, should we say, opening range for Nasdaq, and so now I'd be watching to see whether that is going to contain it or whether that'll follow its brothers and basically break out of that to the bullish side. That's what I'd be looking at. Certainly you can see that bullish sentiment is flowing there. Okay there, ladies and gentlemen, unfortunately we've run out of time. As I say, time flies when you're having fun. I hope you found that session useful. I hope that session has given you just a little bit of insight into what Fibonacci is, or who he was, what it means, and to understand Fibonacci retracements and Fibonacci expansions, and by doing so, how you can utilize them to just make very simple trading plan using Fib retracements and expansions to create be able to sort of trade ABCD patterns. As I said, hope you found that useful. As always, I wish you the best of success in your own trading, ladies and gentlemen. I hope you'll join us next Monday, 2 o'clock London time, for a talk about checklists and their value in trading. And until such time, trade well, everybody. And I'll speak to you soon. Many thanks.